beginning to pour in now. Let me just come to the questions and give Abhinav a chance to talk to us about the challenges that he sees, and perhaps then come by to look at how we are dealing with the questions.
Sure. Thanks, Krish, and thanks, Kapil. All of the subjects that you've mentioned are probably webinars on their own, and probably the challenges that I'm going to talk about from a tax perspective, are subjects of their own. So it's a fairly complicated environment, and what we are attempting to do is just to give a broad highlight or a high-level perspective of the key issues that education universities face in India. From a tax perspective now, one of the biggest issues that I feel, and that's why I'm taking it up first, is the permanent establishment issue, which we commonly refer to as the PE issue. So if you look at the tax treaties between India and the US, the UK, Canada, and many other developed nations, there is always a clause for what constitutes a permanent establishment in India. So even though you don't have a legal presence in the form of a company or a legal entity, but you're doing some activities by, say, for example, you're sending some employees over here, or you are sort of set up a sort of a small office here in any city. There could be some trigger that makes you as a deemed permanent establishment or an office in India. So, and there is a tax leakage by virtue of you having a permanent establishment in India as high as 40%. So if I take an example of what we commonly refer to as a service PE, so let's take an example of the India-US treaty. So if your employees are spending more than 90 days here in any 12-month period, it could be deemed for you having a service PE in India, and therefore all your earnings in India, all your attributed earnings in India could be subject to 40% tax. So at universities, typically sending in their teachers or their professors, for collaborations into India, need to be mindful of this PE concern. Also, you mentioned there were many entity options that are available to education universities, but you need to understand that with every entity a different tax system applies. So if you're having a for-profit company in India, you could have a tax slab of 30%. If you have a trust, it's again slab based, depending on if you're a determinate or an indeterminate trust. If you're having a license office or a branch office in India, the tax rate goes up from 30 to 40%, excluding surcharge and cess. If you include that, it comes out to around 43%. Then there's the added tax systems of dividend distribution tax, withholding tax rates. So you need to be mindful of all these rates that come into play when you are sort of setting up an entity in India, and with each entity a different tax system applies. What is most important for education universities is to have some sort of tax break. So the Indian Income Tax Act gives a lot of exemptions to education universities, but as you say, with something comes something more. So with these sort of exemptions, there are a lot of restrictive covenants attached. If you have the 80G registration, if you have the 12A registration, let's say, for example, the 12A registration says that you need to flow back your surplus or profits in a more common sense into India. So there lies in a key conundrum as to how do you take profits out of India when your registration requirement is that everything needs to be put back into India. So you need to work around it, you need to plan around it so as to enable tax efficiency. All these 3 points that I covered earlier are from the perspective of direct taxes. Then this whole added subject of indirect taxes. You have VAT, you have import duties, but what's more relevant here is service tax. So traditionally Indian educational universities are exempt from service tax for their services, but as a foreign educational university, that exemption doesn't apply. So, there's a concept called reverse charge mechanism where you're providing services to, your Indian clients. There could be service tax implication under that reverse charge concept. Also, if you set up a for-profit company in India, service tax exemption does not really apply anymore. So, you need to keep these in mind when you're looking at your tax plan, global tax planning. Service tax is almost as high as 12.36%, so almost 1/10 or more of your revenues could be hit potentially if service tax comes into play. The next point, I don't really think I need to talk about much here, because almost everybody knows that India is like a compliance, it's like a whole other world of compliances that you need to follow. withholding taxes, VAT returns. You have, you name it, and it's almost on a monthly basis. You need to ensure your taxes are paid every month. You need to ensure your returns are filed every quarter. There is a half yearly return for service tax, annual returns. Multiple compliances and reporting. If you have FCRA, then you have a separate reporting. There is separate reporting to the RBI. So there's a huge number of compliances that you need to be careful of. And what you need to be mindful of even more is that non-compliances lead to penalty and interests, which are sometimes even more than your actual tax liability. So be very careful, because most of these interests are time-based. So the more the lag of non-compliance, the greater the penalty obligations on you. Tax treaties, I did touch about this in the PE concept, but traditionally payments like royalty or fees for technical services or know-how, or brand or IP sharing agreements traditionally have some sort of withholding tax implications under the tax treaty, whether it's with the US or the UK or Australia, depending on where your home university is located. So and there are some exemptions there. There's a make available clause which excludes or exempts non-technical services. So you need to plan around these tax treaties, and need to see as to what is the actual hit that is coming to you from all your transactions. Last but not least is transfer pricing. So this is a hot and raging topic here in the last few years. This system came into being, I think, in 2001 or 2002. Traditionally, transfer pricing is a check on all your international transactions between related parties. So let's say, for example, you have a home office in the home country and an office here in India. So any transactions between those two will need to be audited and benchmarked from a transfer pricing perspective. So to check whether all these transactions are at arm's length, which is a more fancier term for fair value. So there's a lot of litigation going on in India because of transfer pricing. More than $40 billion or $50 billion of here in litigation. So you need to be very, very careful as to how you plan around transfer pricing. There's many more points. There's a paucity of time, so I'm going to go back to Krish and make me stop here.
Wow. So I think both Kapil and Abhinav, I think when we open this up for starting a technical session, I never imagined you would cover so much in these 2 slides. We've originally said we will take these questions at the end, but looking at some of these questions which are coming, which are extremely relevant to the slides that have been spoken about, why don't I pick up some of these questions from the audience and present here. Kapil, I'm going to come to you on this one. The question says, I'm not an educational university, but I'm engaged in providing auxiliary consultancy services in this sector. Do I need FDI approval? So how do you tackle that?
Simple, crisp answer, you don't need. So you can set up your business in India without any approval. It'll be under automatic route of FDI regulations. It's easy to set up a profit-making entity in India. You do need a director who's living in India. It could be expat, it could be a local citizen having Indian passport, overseas, foreign passport, doesn't matter.
Okay, hope that answers. I'm sure we can come back and carry forward on that. And I see something which I'm going to choose for you, Abhinav. My university is only into business development activities in India and have been advised to set up a liaison office. Is this advice correct?
Well, there's a very, very thin line between what constitutes business development. If you're traditionally doing business development activities like everybody else does, liaison office will actually be really not applicable for you, because it's a very restricted list of activities that you can do under a liaison office. You can do general liaison activities. You can do generally, quasi-marketing activities here in India through a liaison office. But business development activities traditionally won't be allowed. And what I think the audience needs to be mindful of is that how much time it takes for a liaison office to be set up in India. So I hope you have almost taken in a year or a year and a half as to this much time is going to be a reasonable timeline for you to set up your business in India. So hope that answers.
Okay. Thank you for that. And I think before we move forward, let me try and introduce another poll question. And once again, I request everyone to participate in the poll. It should load in front of you right now. What's the extent of tax and regulatory issues that you face or have faced in India? we asked you to be really frank in terms of the issues that you face, both from an entry and a compliance perspective. The other option is the market entry was smooth. I face issues with compliance now, which is a different scenario. The third option, of course, I'm still struggling with market entry. So three different choices. We'll give you another 10 seconds so that you can actually participate in the poll. It is open. We will leave it open for another few seconds. Come on. Okay, that's interesting. The choices are coming through. We'll close in a couple of seconds. So if you haven't, please go ahead and enter your choices. Okay, let me stop the poll and share the results with you. So again, I think it's a very, very easily seen scenario where you face issues both from an entry and a compliance perspective, but also good to know some of the participants had to say that the market entry was smooth, but they face compliance issues now, while some of them are still having problems right from the start. So, okay, so going back to the presentation and just picking up from where we were, I think, Abhinav, Kapil, both of you, given the chance, I think you have talked in detail about where you think are going to be the challenges, and you also talked about the structuring that needs to be considered when one looks at India. But having talked a lot of challenges and issues, I'm going to ask Kapil, do you think there are solutions to plan around the tax and regulatory challenges that are in India?
Yes, simple answer, yes, and it is technical. It will gonna take time. It needs to understand that what are your objectives to achieve out of the whole planning, and why don't I try to explain that in the next slide, that how does you can make a complicated topic to be more simpler? And let me try. Right? I cannot guarantee whether I will still made it simple or not. Okay. So let me start it on this slide to give you a little more in-depth analysis of this and how do you structure or how you should structure your business. So take an example. There are different activities which you can do in India. Take an example that if you are providing corporate training, or if you're writing curriculums, or if you are providing some sort of additional auxiliary educational services. So it's fairly easy for you to set up your business. You can incorporate a profit-making Indian company, which is mentioned here as an ICO, which can provide management services, which can provide executive education. It can also render research services or sell your research to the Indian corporates and education providers. So very easy to set up. You need Indian shareholder to Indian director. Investment is fine. You can invest easily. You can transfer monies under the automatic route. You don't need any further approval. And when you take profits out, you can also take profits out by way of dividend, which may not be the tax efficient way. So better is to take monies out from India in the form of royalties or fees for technical services, which means as a foreign education provider, you are generally providing these services, or you have provided the technical know-how to the Indian company to render these services to the Indian clients. So it's fairly easy to take out those profit, or I would say book a cost in India as a management charge from the foreign education institute, and the Indian company will transfer these funds as expenses in their books of accounts and income for you as a foreign education provider. There could be withholding taxes, which we need to understand as per the treaty between India and US, UK, and whichever your home country is, to design that it should be tax efficient in terms of withholding tax deducted from India. So that's fairly one way of doing business when you are into those category of business. But if you are in a business where you want to provide training program degrees, for example, you want to set up or you want to have a partnership with the Indian institute, and students who are going into the Indian institutes, they're going to do 2-year degrees in India and say rest 1 year or 2 year in your home country, which is US, UK, Canada, or any foreign country. Then the whole structuring, which have to take a different shape, which is where I've defined as a separate box, which you can see as a Indian trust society, not-for-profit company. So that's a kind of a setup which needs to be done, for which you need an Indian partner. So Indian partner will set up this Indian trust, Indian society, or a not-for-profit company, which is a Section 8 company. Mind you, you can also, as a foreign education provider, can set up a non-for-profit company. But I would not advise, because it is a difficult process. It's difficult to take profits out from it. So it's better that let Indian joint venture partner to set up any of this entity. That entity will own the college to provide the education setup, or there could be already a education college. For example, MIT is one of the Indian university, and you don't need MIT to set up a college or a trust. They already have a trust. They already have a company, a college in India, and you just need to set up your own profit-making entity. And from your Indian profit-making entity, you have a partnership with the Indian trust of that university or college, and provide them services. Provide them services from the Indian company of yours to their trust, so that they can make payment. They can make payment to you for those management services. You can teach the teachers, which is also prevalent in these days in India, where professors can come from overseas. They can sit down. They can live as expats in India under your Indian company, and then they will be providing the education services to those Indian trusts or education setup college, and they will pay you for the management services or consulting services. They will withholding taxes at 10%, which is fine. You can recover that from the Indian government while you're filing the tax return of your Indian company. So it is fairly simple if I design the structure, and I will not complicate it further in terms of the different services or different areas which you want to do. Now, if you want to set up your own campus in India, providing education services without a local partner, that's not allowed as of now. Unless the foreign education bill passes in the parliament with the new government, and we don't know when. I'm hopeful. I believe you're also hopeful. So, but till then, you would need the Indian partner to provide at least the education degree programs, diploma programs in India, and have a partnership with them through your Indian setup, and take it on from there.
Okay. This is definitely one of the solutions, and I'm sure you have many more tricks up your sleeve, Kapil. Thank you for that. I think there are a lot of questions that are coming through, and I can see why, considering this is an extremely technical presentation, and there are a lot of quick responses that are being sought. What I can tell you is that please leave your questions, and we will perhaps expand the Q&A time so that we can address all your questions to really move this forward. I think the solutions that are being talked about in terms of the tax and regulatory challenges, I think it's definitely a good start. But let me also bring in Abhinav into this. Now, Abhinav, having spoken for a long while to talk about the different kind of challenges that exist in the tax structure, could you tell us as to what should our clients and the participants in this webinar, what should they do to protect themselves? Is it possible?
Oh, definitely possible. I think Kapil very, very accurately gave a very nice structure, and very typical structure that could help mitigate all these issues. So that's where my first tool comes. For a education university who wants to invest into India, is that you need to ensure that, number one, your business structure in India should meet your defined objectives as to what you're planning to do in India. Is it research? Is it degree education? Is it executive education? Is it more than that? Is it less? Is it only licensing activities, so a license office can come into play, or is it something more? So that being said, it also needs to be carefully considered that your business structure meets these tax and regulatory demands that the regulator places on us. So while what Kapil gave an idea of having a structure in place, but there will be many iterations. There will be many slight modifications to this structure depending on what the need is, what the tax implications are, what are the type of transactions that you want to enter into. So number one, to ensure that your business structure is compliant, as well as it is structured good enough to meet your objectives. Do it in house, do it through your tax consultants or your legal lawyers in India. But definitely that is the number one to do. Along with this, what you need to actually do is also implement a tax planning exercise. Traditionally what we've seen with our clients is that tax planning comes at a much later stage, when you're actually running the business in India, or sometime during the implementation phase. But having a sort of a pre-tax strategy always helps to mitigate your global taxes. So it is imperative that we do something like that. Again, this could be in-house, outsourced, but it is definitely a need of the hour, especially looking at what the regulations are in India. I mentioned compliances earlier, so make sure your compliances are on time. It is always good to have some sort of expert on board who advises and who takes care of your day-to-day compliances, because delays are a big no-no. The PE situation is something that I talked about earlier. So, some of our clients, for example, do a quarterly or a half-yearly review, which is something that's quite robust and quite required. So, anytime they feel that they're breaching the PE definition, according to their respective treaties, they alert their tax cells, and thereafter starts the mitigation process. So that's something that's quite useful sometimes. We've also seen a lot of issues coming up for expat employees. Getting the basics registrations in place sometimes can be a arduous task. There's something called a PAN number, the PAN number in India, which you need to get for every employee. So sometimes even that takes a lot of time. So and then their tax compliances sometimes lead to so many leakages that expats go back dissatisfied that the amount of tax they're paying is not really what they expected. So ensure that their compliances and their tax planning is in place. The last point, like, might seem like a typical sales pitch, but you need to have an advice in place for what sort of legal presence you need to have. Couple talked about multiple entity options. You need to have registrations and approvals in place. So typically for every client that we work with, 10 to 12 registrations, automatically kick in, and that could be a very high number for somebody who's coming from the developed part of the world. So you need to ensure that all these registrations are in order. You need to ensure that all your payroll, HR, accounting, meet all regulatory compliances. Your agreements is something that needs to be worked on when you're working in India, because everything boils down to an agreement. You need to have some sort of specific tax clause in place as to whose responsibility the taxes are, so that at the end of the day, when you are getting the payment, you're not getting a check which is half of what you expected. You need to have some sort of responsibility for compliances. You need to have an indemnity in place. You need to decide what jurisdiction is coming into play. So a lot of things when you're typically looking at an agreement with Indian clients, and what we've seen from our experiences, Indian clients traditionally structure agreements in such a smart way that many times our clients fall on the wrong side of things. So these are just some of the tools, but the sum and substance of it is take care of every step when you're working in India.
Yeah, seems like a stringent set of activities, but can I also then say that it indeed is important to really stay tuned to every bit of step that needs to be taken up. And I know that this can be staggered, but looks like if you were to employ a team by yourself in India, is this going to be a big team to do this?
Let me take that. I don't think you need a big team in India. It's just that you need to employ a resource as well. You need to well thought through a plan where you should know these are the objectives. Talk to people in India that okay, these are the objectives. I would say talk to specialized people in the education sector, and because they have done and dusted, and then that's it. You don't need a big team. You just need right people to talk about it.
And just let me add here that your sort of review should not be just one time. It needs to be periodic, because the law in India is quite dynamic in nature. So when you're employing the right people, make sure they're also up to date with the relevant changes here, so that every now and then your strategy could slightly be altered because of the upcoming changes. Krish mentioned about the budget. So be in touch and have a sort of periodic review of things.
Okay. Thank you for that. We will come back to the budget in a bit. Now, we have a few poll questions, but I think I'm going to skip that because I have a steady inflow of questions that are coming up, and I want the panel to address these questions right away so that we don't lose context in terms of what we have saying so far. A couple, I'm going to address this one to you. So do all the conditions, the FDI, the tax, compliance, etc., do they also apply for the not-for-profit sector, non-education?
Answer is FDI is anyway applicable to anybody who's coming into India. But if you're a non-profit, it does apply to you in a more stricter way. If you are a profit-making entity, you're setting up a profit-making entity, it's an automatic route. You don't need to take first approval from somebody. Like we have a board called FIPB, Foreign Promotion Investment Protection Board, and And that specifically talks about that whenever you are coming in a restricted area, which, for example, retail, defense, media, and education, there are few sectors in India which are not yet opened up for a foreign investment as other sector like consulting and few manufacturing sector. So in those areas, you would need a prior approval from the government of India. Otherwise, you don't need. So if you're setting up a profit-making entity, even though you're an education institution, you don't need any approval from FDI perspective.
Okay, hope that answers. And I also have a leading question, and Kapil, I'm going to come back to you on this again. Does a not-for-profit company, Section 8, also require resident director?
Yes, that's a new stricter law which has come up last year, and that applicable to not-for-profit or which is Section 8 company or even profit-making company. So from last year onwards, means April 2014 onwards, you would need a director who is living in India for more than 182 days in a calendar year. What does that mean? So at least one of your director on the board has to live in India. It can be an expat who you have sent from overseas to work in India. He can be that director. So there is no need for a local resident like you have in Singapore, you need a local resident to be on your director. But in India, it could be an expat or local, but that person as a director has to live in India for at least half of the year, which is 182 days out of 365.
Okay, thank you, Kapil, and hope that answers. So we are now officially in the Q&A space. I'm just selecting some of these questions and presenting it to the panel. Abhinav, because you talked about the transfer pricing issues, I'm going to let this one go to you. And this is a very direct question. And this one says, how to mitigate transfer pricing issues?
So yes, the answer is there are a lot of ways. The government over the recent, last few years, has started taking steps to mitigate this, because of this being such a highly litigated subject. There is something called the advanced pricing agreement that has come into picture about a couple of years ago. You can traditionally approach government authorities and before you enter into a transaction and sort of benchmark it in an advanced mechanism so that you don't have to go into post-facto compliances and litigation. So that has come into picture, and I think last budget also allowed you to push that back for the previous 5 years also. So that's one thing. There's something called the safe harbor rules that have come into play, I think, a couple of years ago too. Traditionally, if you're doing auxiliary services or doing, just having a back office here in India, you could take, you could take cognizance of these safe harbor rules. Fix your margins here in India, and then you don't need to worry about litigation. If you are into litigation, then something called a DRP, that's a dispute resolution panel, comes into play, where at the initial assessment level, if you have a bad order or a tax demand, you could approach this dispute resolution panel and get a quick fix solution. But there's a standard disclaimer that I always give, that these things take time, being extremely litigated subjects. So you need to plan ahead so that you cover the time lag that is required. But there are a lot of planning opportunities.
Okay. Thank you for that, Abhinav. I think that's an extremely detailed response. I have one more question that has come in from the participants, and I will leave it to either of you to answer this question. Can foreign university get into 2+2 partnership without setting up any trust, and degree will be provided only by the foreign university? What do you guys think?
Answer is yes. You can have a partnership with the Indian university who is already having a trust, and you can do 2+2, and you can and the Indian university or Indian trust, which is setting up, having an underlying university or college, is providing the education services, and students are getting a 2 years or a year degree there, and the rest of the degree is awarded by the foreign university. One caution which I would say when you're drafting your agreement, means you can always send that to us to work on that. But one important caution is that when student is paying the fee for the foreign education degree, means a foreign education provider degree, like a 1 year he's doing outside India, I would say the best is that that student is paying directly to the foreign institution from his first bank account, rather than paying the whole fee for, say, it's a 2+2, so 2 years in India and 2 years overseas. So I would say 2 years should be paid by student in India, and 2 years should be paid directly into the foreign country rather than paying 4 year total in India, and then the Indian university or an Indian education provider is supposed to transfer back to the overseas education provider. I would avoid that structure.
Okay, hope that answer is useful. That is obviously is something which came from one of the participants, and I have a few more. This is going strong. Okay, so again, couple, I need to send this your way. Do you assist in FCRA, ATG, and 12-year registrations?
We do, yes. That's bread and butter for us. I should definitely warn you that FCRA and ATG and 12, they all take time. They all take conscious efforts to, liaise with the authorities here. At least FCRA, I would say at least take 4 to 5 months. ATG takes 3 to 5 months. Similarly, you can also apply along with ATG. So in total, it should take at least 3 to 5 months. Yeah. So we do provide this, but I just want to warn out that it takes time to get these kinds of registrations.
Time like seemed like a common theme.
We are hearing about that disclaimer about these things take time, and I can understand why. Abhinav, I'm going to send this your way. This question wants us to talk more about the withholding tax requirements under the income tax or the double tax avoidance. Anything you can offer your opinions here?
So, India works on a tax at source system. So when you're making any payments to your vendors or your employees as salary, the income tax gives an automatic obligation to the payer to withhold tax on behalf of the payee. Traditionally, what would happen is that every month when you're making such payments, you need to withhold taxes at prescribed rates. It ranges from 1 to 10%, sometimes 15 if it's in the tax treaty. And then, at the end of every month, within 7 calendar days of that, when that month ends, you need to deposit those taxes with the government. So there's a monthly deadline, so to speak. And every quarter, you sort of need to summarize these deductions in a prescribed format and then file your tax returns. So I think within 15 calendar days of the end of every quarter, you need to file your tax returns. I think the timeline is slightly different for March quarter. Traditionally, that's how it is. And then you also need to issue certificates. So when you issue certificate, there's a defined timeline for that, so that the person who's receiving the payment can take a credit. If you talk about tax treaties, then a lot of other factors come into play. Then the foreign universities need to have a PAN number in India, need to have a tax residency certificate. Otherwise the tax rates, the withholding tax rates go much higher. If you do have these met these compliance requirements, then the tax rates come lower to say 10 or 15%. But then to claim that credit, you need to file tax returns in India. It's a little complicated, and I don't want to go on and on about this. But yes, there are a lot of compliance requirements.
Okay. I do need to bring this to a close, but what I'm going to do is we have noted down some of these questions which require an elaborate response, and what we will do is we will get in touch with you directly after this webinar so that we can expand on some of the topics that you have chosen to ask us questions in this webinar. I'm tempted to ask about the foreign education providers bill, but instead let me just change the focus towards the budget that we are all very keenly expecting by end of this month on February 28th. So this question goes to both of you, and this comes from me. Abhinav, what are your wish lists for this budget? What do you think will change? And remember, I said foreign universities bill. So take it away.
So firstly, I have to work this weekend for sure because it's coming over the weekend. Yeah. So my first wish list for the education sector is simplify the tax regime. Like, for example, the indirect taxes. So there are some ambiguity about, for example, at foreign education, Indian university, if they are providing services, they don't need to charge service tax. Similarly, when a foreign education provider comes into the picture and setting up its own profit-making company or non-profit-making company, there are no clear guidelines whether they would be charging service tax or not. So those guidelines, which I presume when the new GST, which is the goods and service tax, will come, there will be some sort of clarity on that, and why not in this budget as well. And to help the foreign education, I am thinking, and I'm really counting on the new government, that how do they bring the teach the teacher education programs where they will have foreign education provider help the Indian teacher and set up some sort of the benefits for the companies or the businesses who are thinking to come to India in that sector. For example, skill sector also. So I'm really hoping and dreaming about some profit holiday period for the skill sector in India, which is really you need to educate or you need to provide skill to 500 million odd people, right, which are within the age of 25 to 40. So those are my expectations from the budget, to be honest.
And before I go to Abhinav, I think couple, are there any indications that what you have just mentioned, do you think any of this will actually come through in the budget?
Few of them, yes, because the current education minister, she's talking about this, and there is a skill sector specific ministry which is talking about this. So we are getting positive, signs of it. The only issue is that recently the government have lost in their election. There are a lot of pressure on the government about the land acquisition bill which they passed recently, and now it's everybody, the farmers of India, they're educated. So I'm just worried about that these bigger issues should not take the issues like education away from them. So they need to consider it wholly in this budget, I would say.
Okay, so we will know soon then, yeah?
Yeah, absolutely.
Okay, moving on to you, Abhinav. I also have another question where it says, in the forthcoming budget, are you expecting any changes in the area of tax that you have outlined? So just going back to your previous slide, and also ask you to present your own kind of wish list for this budget.
So, obviously the wish list is never ending. You always want so many changes to come across, but one thing I'm hoping on is that I mentioned transfer pricing, so it'll be good to see that are there any sort of relaxations for the education sector, because typically education sector being not for profit, transfer pricing becomes some sort of a clash, because transfer pricing talks about benchmarking all transactions at a fair market value, whereas not for profit sectors sometimes work below or work on a no profit no loss basis. So maybe some respite there, but I mean it's a very, very tall order. I don't expect many changes there. Also maybe again sort of a far-fetched dream, but some changes in the FDI, which sort of helps structures to be much more simpler, and that then translates onto some tax efficiencies which come about for the educational universities. So I'm hoping there's something there, but it all remains to be seen over this weekend.
Okay, so I think we are set up to watch this budget and see what changes come through, which obviously impacts the session that we have had today. Couple, Abhinav, thank you both for your valuable inputs in this webinar. I'm sure as much as it's technical, we have noticed that some of the audience were definitely hoping for such a kind of a technical treatment, and I'm sure we will have follow-ups for the questions which we could not answer today. Up on the screen, I have left your contact address, but we will make sure that all the participants will receive a copy of the presentation used, and also the webcast will be made available on the website. But hey, looks like I'm forgetting something. So we decided that we will circulate a white paper on this subject exactly to talk about navigating the tax and the legal framework in the Indian education sector. Such a white paper is now ready. We will also make sure that you receive a complimentary copy of this white paper, and it will be in your inbox very soon. And of course, this is also made available on our website. And feel free to get in touch with us if you have any questions. And of course, thanks you again, both Kapil and Abhinav, and I'm sure you will have a lot more explaining to do after the budget and see as to how this presents an entirely more promising and extremely opportunistic landscape for the foreign education providers. Thanks again, and hope everyone enjoyed this webinar session. Keep watching our website for further announcements on upcoming webinars. We hope you could join us. Thank you, and have a good day.
Thank you. Thank you.